All right, what's going on, Even traders? In this video, I want to share a cautionary tale with all of you that informs and drives the rules and the style that I have set up now, and a reason why I have specific rules in place that I do, why they work, what they're designed to prevent, and all of that kind of stuff. What I like to do sometimes is I like to go back to some of my worst trades, some of my blow ups, some of my mistakes, and just kind of look back and look at what I did, why I did it, and what would I do now in the same situation. I like to look at that type of stuff and just remind myself and kind of rejuvenate myself as to, okay, now I wouldn't make that same mistake based on the rules that I have in place. Now this would have saved me, or if it wouldn't have saved me, what would have saved me? How can I adjust so that in the future I won't make the same mistake? And this particular day is a perfect day to illustrate exactly what I'm talking about. So this day in the market is November 22nd. November 22nd. This is a Friday, and I believe it's a Friday. Oh, it's a Monday. So actually, I need to go back to the. No, this is the right day. This is the right day. Thought it was a Friday, but apparently not. Let me see. Yeah, it's 22nd. Okay, yeah, this is the correct day. Okay, so this is a Monday, and when you go back um, to this day and looking at it now, I don't know what I was thinking. Really, it's kind of embarrassing. So um, I'm sharing this with you guys so that hopefully you won't ever have to go through this. But I guess we're all gonna have days like this at some point when we're learning and trying to ramp up and everything like that. Let me see what was on the calendar for that day. Yeah, 22nd. So this is the calendar for that day, right? All we have is existing home sales, which is whatever. The home sales were popping back then. We knew it was going to be good. And then President Biden talking. That's it. No other news that day, right? Crazy. So, in my head, I'm already primed for, okay, it's going to be an easy day. There's nothing really going on, all of that good stuff. That's what's in my head at the time. So the market opens up oddly positive because, again, no news except for, I think, new home sales. I don't know what time that came out. That came out at 10 o'clock. Okay. So the market popped off right at 9:30. And then when the new home sales came out, it leveled off. It was just like, okay, well, it's a good number. It already, I don't know what's going on. It's kind of weird. So first kind of yellow flag, I'll call it, is just the weirdness that the market popped off on no news, and good news didn't really move it. It's kind of weird. Okay, so fast forward, here we are. It is 11:45, and this is what the market's looking like. This is what we see. And I'm gonna go ahead and hit the play button so you can kind of see. Okay, so we're starting to trail off a little bit of the strength. We've got a gap here, which is another thing I didn't identify. But we've got a gap that we could fill. We've got our pivot points right here. The market looks like it wants to fall back through the pivot points, whatever. But I think that I had tunnel vision because right now it's 11:47. At 11:50, I'm going to place my first trade. So we can see the market starting to come down here. Still 11:47. We get a push down in the market. Let me blow this up a little bit just to make it look more like how it felt at the time. So the market starts to push down. Our stochastics, if you see that down here, our stochastics is well within oversold territory. Well within. There is no curl up or anything like that. It's just down. Okay. So we have that. So almost time to trade. So what I'm going to do is I'm going to place a similar trade to what I placed on that day at the time that I placed the trade. So I placed a trade at the tail end of 1150. Okay. So we can see the market's getting some nice deep pushes down again. It's 1150 now. So right about a couple more seconds. Right about here. Okay. So here is where I placed my trade, or I got filled on my trade. Okay. So I got filled at this exact time for a put spread. Now let's look at this. Okay. The market's pushing down. It flew right through the pivot point as if it wasn't even there. I don't have any other stuff. I don't know what price levels I was looking at the time, but it flew through our pivot point on both sides like it didn't even exist. Okay, so it's not honoring at least this major price level. We're kind of doing a waterfall down. Our stochastics is telling us that the market is on a downtrend. It has not started to, the downtrend has not started to subside yet, but we're in the middle of a downtrend and falling, right? So this is what I'm seeing. If I look in the internals, which I wasn't using the internals at the time, but if I look at the internals show that the VIX is climbing very, very sharply. We're rolling over on our advanced decline, right? We're starting to roll over here. Our volume is starting to roll over, albeit less so than everything else. And our tick, we're getting some lower and lower ticks on our S&P ticks. And put buyers are starting to buy puts, right? They're starting to buy more and more puts here, which is not unusual, but the rate at which they're buying puts is a little bit steep. It's a little bit steep. So this is more like wait and see. All right. But above all else, look at the price action. The market looks like worse than anything else on the internals, right? On the price action. So I go in and say, ooh, that looks good. That looks great. Let me go ahead and sell a put right here. And I've always been a person that's more contrary or counter. Like I have a style that's kind of counter market. I like to catch reversals and all of that kind of stuff. So that usually leads to me getting in early, trying to catch the falling knife. And this is the definition of a falling knife here. So that's something that I have to watch out for because I know myself, but I didn't watch out here. So what I did is the market is currently at 47.20. So I go in and I do a, let's see, 46.90 put. Yeah, 46.90 put. Okay. So that would put us right here. Okay. Now, this is something I want to bring up to you guys. Okay. So you can see the market's at 47.20 and I'm looking at 46.90. Okay. So that is what, 30 points? Let me just make sure my math, because I'm, not good at quick math like that. 47.20 minus 46.90, 30 points. So if you know my rules, you know that I have a rule of 40 points plus is what we're going for as far as space between the market. Okay, this is one reason why. So this doesn't show our expected move or anything like that when we're using on demand to go back into time. But I could tell you by the pricing of the market, 2 times the expected move of the time was probably going to be around 46.85 to 46.80, judging by the pricing that I'm looking at, something like that. So I'm a little bit above 2 times the expected move or 2 standard deviations. I'm within the 40-point threshold that I have not added yet, but I'm within that threshold. And I go ahead and place a trade at 46.90. So let's go ahead and set that trade up. Now, at this time, I was doing a ton of contracts. So I want to do a similar thing so you can see how the market moves when you have a lot of contracts on. So I'm just going to do, let's see, we got 100,000 up there. I'm just going to do 90 contracts right here. Okay. And it was a 15-cent credit that I got at the time for the put. So I'm going to go ahead and place this order for 15 cents limit and let that go through. That's going to give us a $1,350 credit. And it's going to cost us about 43,000 in buying power for that particular trade. So let's go ahead and put that through, and you see it goes through. All right, so that's where we're at. We already don't have a lot of margin to play with, but that's the trade that I did. Okay. So let's go ahead and let things roll and see what happens. So I'm just going to fast forward it a little bit. And you can see, that. So we place a trade right around this bar, I believe, something like that, where the market was at 47.20. Yeah, the market was at 47.20 when we placed our trade. Now look what the market did after that. Now I really want to go back a little bit just so you can see the terror, the terror that goes through your soul when something like this happens. And this happens to me a lot. I'm like notorious for placing a trade and then the market dives right towards my strike. But I want you to see what that looks like as it's happening, right? So we just placed our trade at 47.20 right here, and we're getting this bar right here. And let's see if we can get this to go fast enough for this video before I run out of time. Yeah, so you can see the market starting to bang down. Remember, we placed our trade right here, and our strike is like right here, like right below where this is. Right here, right above the screen line is where our strike is. And we have all this time right here that we have to get through and make it through before our trade to expire worthless. So this is already chewing up. It's already chewed up 5 points. Now we're closing in on chewing up 10 points. And this is all within like the first, what is that? The first 4-5 minutes. It's already chewed through about 10 points of our buffer. And we only had 30 points of buffer when we placed our trade. So you can see that it's terror that runs through you when this happens, right? If we go to our monitor tab, you can see, look, we're already down $4,000. It just went from 3,000 to 4,000, just like that. We're 5 minutes into the trade, right? 4,500, and it's just stacking and stacking on top of itself, right? So this is just absolute terror. Okay, so what did I do? I panicked, of course, because I didn't know what else to do. And look at it; it's just going straight towards my strike. Remember, my strike is right here. And we're now at 47. What is this? 47.06. 47.06 and falling very quickly, right? So I'm gonna pause it right here. Actually, I'm gonna let it go for a little bit more. Market's falling on top of my head, right? And what do? I panic, of course. So I'm like, okay, this is crazy. Where's my account value at now? Down almost $6,000, right? Remember, we only put up, what was it, $43,000 in the first place. We're only supposed to make $1,300, and the market's falling on top of my head. The debit to get out of the trade at the moment is 80 cents. We only took in 15 cents credit. If I was following my rules, I should have got out at about 45 to 60 cents. So we're already 20 cents past our full day's buffer as far as getting out and triggering our stop loss. And I wasn't trading with a stop loss right here. But I hadn't really refined the concept of a mental stop or anything like that as of yet. So trading with large dollar amounts, unrefined trading system, all of that stuff. So we're down, $6,000 on the day already within what, 5 to 8, within 10 minutes, like 8 minutes. Okay. Terror, right? Not ready for that. Okay. So if we look again, Stochastics is still doing what? This is why I say wait for stochastics to enter into the mid zone before you place a trade. Wait. And this is why I kick myself when I don't, because I have a crazy habit of not doing so. I'll see the stochastics cross the oversold line, and I think it's the word oversold that gets me. But I see it get oversold, that the market can stay oversold for quite a while it's still dropping, right? So this is why I say wait until it starts to curl back into the mid zone before you place a trade. So we're getting sliced up. I panic. And what do? I roll. I roll to tomorrow. I just find something and roll. And this is another reason why I say now, just close the trade. Just close the trade, because what I guarantee what I was doing during this bar and this bar, the roll actually went through at 11:58. Almost 11, basically 11:59 is when the roll went through. I can guarantee you what I was doing while all of this was happening was looking to see where I could roll to. Okay. Through all these 5-10 minutes right here, it was dropping, sweating, stressing the whole time, trying to find a place to roll to. Okay. So this is why I say just close it. Just close the daggone trade. You can find a new trade later. Okay. This is where that rule comes from as well. So I'm going to let this get over to about 11:59, and then we can see what role that I did. Now, I guarantee I'm not even looking at the market or anything right at this moment. But let's see, we're at 11:58 and a half. Let's see, we get a little bit of relief, a tiny, tiny bit of relief here. All right, 11:59. Okay. So let's go over to the trade tab or the monitor tab and get this roll on, create rolling order. All right. And I roll to November 24th. I guess the 23rd was like a holiday or something like that. So I roll to November 24th, and I roll down how many points? I roll down 75, 46.80. All right, so I roll down 10 points. 80 and 75. And let's see, I get 20 cents for the roll at the time. So this might not give me the exact amount that I got the roll for, just because this is, simulated trading, but I only got 20 cents for the roll at the time. This is saying 85 cents, which is not what I got. But that's how sim trading is. Let's see. Can I get it if I go back a little bit? Let's see. Maybe this will give it to me right here. Roll 1800. 39 cents, whatever. Okay, close enough. All right. So I get my roll, and I'm just like flabbergasted and done for the day. And just, you know what? I'll hope that everything works out tomorrow. So let's go ahead and fast forward the rest of the day so we can see what the rest of the day looks like. Get it over to, I'll say 15, which is 3 o'clock and maybe 45. Okay. So fast forward to 15 minutes before the market closes. It's just an insane day. So let me back it up even more a little bit, because I just want to really get through how crazy this day was. All right, here. Okay, so this is about 15 or 3:25 in the afternoon, right? So right about now, I'm feeling okay. Okay, like I feel like maybe I overreacted. whatever, the market's recovered, everything's fine. It just had like a little flash crash thing going on. And, I rolled or whatever, but at least I got a credit for the roll. And tomorrow it's going to be fine because the market's recovering and it's all good, man. It's all good. Chill out, right? It's kind of what I'm telling myself at the time. If I go over to our monitor tab, the roll trade is looking fine. I still have to collect the remainder because this net liquid number really shows you all the money that you need to make back for your roll. But I'm in positive territory, at least on the roll. It's fine. I got a little bit of a lead on the market. I'm at 46.80 and the market's currently at 47.25. So I'm, still I'm down here, so I'm feeling okay. Not too crazy. I'm way down here, and the market's way up here. And this is 30 minutes before the market closes, 35 minutes before the market closes, feeling pretty good, and then this happens. Start to get some red. Okay, the market's going to sell off a little bit before, it closes. We only got 30 minutes. We only have 30 minutes, guys. We can get through it, right? Whatever. Then this happens. Okay? And it's like, okay, well, we still have the low of the day. The market might, try to pair the lows of the day. It's just whatever. Biden at this time, what I didn't know or realize at the time was Biden, his speech that we saw earlier, his speech was to renominate Jerome Powell, and the market did not like it. Okay. And I don't know why it reacted when it reacted, because the speech started at like 2:30 and it's now like 3:45. But the market absolutely didn't like it. Okay. So we get this by 3:45. We got 15 minutes till, and I'm still rationalizing, y'all. I'm still rationalizing. Let's take a look at the account. It's like, oh my God. Okay. Well, it's because the market is falling so fast. It'll recover. It'll bounce. It'll whatever. I've already done my roll. Where am I sitting at? 90 cents on a 50-cent roll. So, I'm still within tolerance, even though I wasn't thinking about that at the time because I really haven't thought about, stop losses on rolls at the time or anything like that. Is, like the 2x and the 3x stop loss rule for rolls. But either way, I'm still within that. It's fine. It's fine. So let's fast forward to another 10 minutes and bang. Right? I mean, heart ripped out of chest, right? We are at 46.80. And again, we find ourselves right up against the wall with a knife at our throat in just 30 minutes time. It's insane. This day was absolutely insane. And yeah, it was just crazy. And it all could have been avoided had I developed the rules that I have now, because I never would have made this trade way up here, wherever it was, 47.20, something like this. I might have thought to get in here or something like that. And I still would have been in trouble. But that's why I have the stop loss rules that I have now. And what I would have done is I would have been out of the trade probably right here, or when it crossed this particular pivot point, I'd have been out of the trade and just took the L at that time. Okay, I wouldn't have rolled. I wouldn't have had to roll, but I would have seen it coming down, and when it hit whatever level or my mental stop loss, I would have got out, which is what I do now. So I'm still in the roll trade right here, and my heart is just, outside of my chest at this point. So we're down another $6,000. on on the day, and it's painful. But I'm in there, okay? So maybe the market overreacted, maybe whatever. The day's done. Nothing I can do about it now, right? Um, so let's fast forward and see where the market actually ended up. Let it finish buffering. Oh yeah, it went down a whole nother leg. So remember, I'm at 46.80 now. I was at 46.90, so that would have got blasted through. But I'm at now. The market's at 46.82, and my trade's at 46.80. And this is within the last 5 minutes. The market went from 46.91 to 46.82. Okay, so I mean, you're talking within 15 minutes, 47.10 to 46.82. All of a sudden, an absolute royal flush. The worst one I think I've ever seen. Okay. So that's where we're at. That's where the market closed. I'm sitting here 2 points away. The market's 2 points away with an absolute 50 caliber pointed right at my head at 46.80. And I have to go to sleep and think about this for, the next 2 days. And this is where the account is down $13,000, on those particular trades. A huge chunk, probably about 20-25% of my account value at the time. And it was worse because remember, I got, 40 cents or whatever on the roll, where I only got 20 cents in real life. So my profit and loss was even worse than this. So I was probably down easily 25 to 30% of my account value, my entire account value, because of course I was trading with this was the first day that I was trading with a major chunk of my account value. Before this day, I was only trading with a piece of my account, like a percentage of my account. Today, I said, you know what? Everything's been going so well that I'm just going to go ahead and go for it today, see if I can get a nice big win. And, going in for the holidays so I can buy some presents and all of this kind of stuff. That's what I was thinking at the time. So I was like, I'm going to just go in for today. And I picked today specifically because there was no news. Right? So that's how things roll, right? So let's go into tomorrow morning because I'll show you what happened the next day and how everything kind of concluded. So let's go. Let me see when the next trade I did was. Okay. So all right. So we're gonna fast forward into the next morning and see what everything looks like. And so here we are. So this is the market close right here. And this is where we open up. We open up down and the market makes new lows. Of course. And I get breached before I could do anything. Right? So we're sitting right here at this low, right? I'll just play it a little bit. And let's see where the market account value is. Bam. It's just like, of course, why not? Why not have all the sum of all my fears come true, right? So we're down another $13,000 on that day. 14, and it's just counting. So I say, okay, I give up. And I close all the trades. I close everything. I just close everything before my entire account value is gone. I don't roll. I don't try to save, whatever. I just say, you know what? You got me. You got me. Okay. And I close the trade at 9:36 for a massive loss. Okay. Massive. See, look at you can see right here, the roll, the debit to get out of it is $2.75 at this point. And I only pulled in 50 cents on the trade. So you're looking at like a $2 plus debit to close out times 90 contracts. Okay. So I like to do postmortems on stuff like this. so that you never have to face this again. Never have to face this stuff again. Now, what would have happened if I held it? I don't even want to know because I closed it. I placed trades after this, like trying to revenge trade, and I think those worked out, whatever. But it was too little too late because I couldn't trade 90 contracts or whatever contracts, the amount of contracts I traded. I probably could trade like half of that at that point. And my confidence was shot, my nerves were shot, my self-worth was shot. I was embarrassed. I was, just mentally destroyed at that point. And that doesn't make for good trading, right? So of course I made bad trades after that because my nerves were just destroyed, right? And I was like, I have to make it back. It's Christmas time. Is this, is that, I'm not this stupid. I'm not this dumb. I'm going to show the market and blah, blah, blah. And of course I made further bad trades after that I shouldn't have made. But post-mortem on this one, again, ooh, that's a long bar. Notwithstanding this being a crazy day, crazy days happen. Crazy days happen. And I like to run trading as a business. And I learned so much from this trade. And like I said, I think I said this in my last video or before last, the market is a medium of exchange between money and experience. And at this point, I had the money and the market. The other side of the market had the experience, right? And we had an exchange. Okay. So at this point, I'm hoping that I have the experience because I certainly don't have the money, right? So I'm hoping I have the experience. And so far, it's worked out, and I've avoided some crazy stuff like this, after this or whatever. So I think I've learned my lessons from here. But what I should have done, number absolute one, what I should have done, really, what I should have done is traded on the call side. And the reason being is because the market gave me calls first because we had this jump up here and then, kind of like a rounded stop off and a fizzle out. At this fizzle out, I really should have sold a call, which is what I would do today, which you saw me do that, last week. In the videos before this, I sold calls first when the market gave me calls, but I wasn't doing calls at this point. I was only doing puts. So should have sold a call at this point right here, probably on one of these red bars, sold that call and been fine with that. And on the low side, if I was going to do puts, I should have sold the put right here, like maybe somewhere on this once I was sure that the market was squarely out of oversold territory and the trend had changed. So what I would look for now is a combination of the stochastics being in range and the price action or a measured move telling me that the trend has changed. So that would be a series of higher lows and higher highs. That would be this series of green bars right here, which coincides with the market coming out of oversold territory. So I should have sold a put maybe on one of these green bars. How low could I have gotten? I don't believe that I would have been able to beat this. Maybe right at it or something like that. Let's see, this would be 47.13. The market was only giving us like 30 points. We'll even say 47.10. The market was only giving us like 30, 40 points of buffer. So I would have been at like 46.70. So maybe, maybe if I just got into 46.70, I might have survived. Something like that. This is like right on the verge of getting stopped out because the market ended at 46.82. And 20 points is usually where like my max pain threshold is, maybe like 25 points. So I'm not exactly sure what would have done because it is the end of the day. What I've gotten out like within, 3 minutes of the market closing, I don't know. It would have been a tough call, but I would have survived. Right? I would have survived. And the trade characteristics would have looked a lot different because, again, I wouldn't be in a roll. The roll looks a lot different than something that's expiring that same day. So I don't know. But it would have been a lot. I would have survived. You know what I'm saying? Had I used the same rules that I use now. Okay. Um, so I like to look back at this stuff and understand. And another lesson that I learned is this stuff: light news days. Just because there's not a lot of news doesn't mean there's not going to be a lot of market action. Um, and that's something I still struggle with, right? But it's true. You can see it right here. Okay. And you can even see this news report. I think I saw this. It says knee jerk sell off from Jerome Powell getting a second term Fed chair, right? So it's just a crazy day. I don't know. But learn from this, learn from me and my mistakes and my blowups. This was absolutely an entire account blowup, if you ask me, and an embarrassment and a blemish on my psyche. So I hope being able to share that with you helps you in your trading and helps you understand why some of these rules are the way that they are, why I trade the way that I do, and what can happen in the market that we want to avoid, try to avoid as best we can. And I'm sure some of you guys would have traded it differently or done something differently or rolled it differently or whatever, or have some type of way that you would have done it instead or would do it differently now and all that kind of stuff. But that's fine, you know. But this is just my particular thoughts. So, all right, guys, I'm out of here. Take it easy.